See, there is one metal that has quietly matched the kind of performance silver has shown this year, and that metal is platinum. Market activity suggests this move may not be a short-term event, but the early phase of a broader shift. Some analysts are now openly discussing scenarios in which platinum could challenge gold's price levels, even as gold itself trades near historic highs when adjusted for inflation. The idea may sound surprising, but recent developments have brought platinum back into focus. For a long period in the past, platinum consistently traded above gold. It held that position for so long that the term platinum became synonymous with the highest tier of quality. In many industries and services, platinum was positioned above gold, not as a marketing choice, but as a reflection of value. While that historical relationship alone does not guarantee future price behavior, it highlights how differently the market once viewed this metal. Recent price action has renewed attention. Platinum is known for sharp movements, and its volatility was on full display in the latest trading sessions. Large percentage gains in a single day have reminded investors that this is not a slow-moving market. Unlike gold, which often moves steadily, platinum can react quickly and aggressively when conditions align. Despite being grouped with precious metals, platinum behaves differently. It is not primarily a monetary metal. Its history as money is extremely limited, with only brief and localized use in the past. Instead, platinum sits at the intersection of investment demand and industrial necessity. It is often described as a hybrid metal, valued both for its scarcity and for its essential role in manufacturing. Although platinum is available in bullion form and can be bought and sold like other precious metals, its true strength lies in its industrial applications. This distinction also makes it riskier than gold or silver. Price swings can be dramatic, and investors are often reminded that diversification within metals should be approached carefully and based on independent research rather than short-term excitement. One factor that consistently stands out is rarity. Platinum is significantly rarer than gold, with estimates suggesting it is produced at a fraction of gold's volume. Even more important is where it comes from. Global platinum supply is heavily concentrated in just a few regions, mainly parts of southern Africa and northern Eurasia. Any disruption in these areas, whether political, economic, or logistical, can have an outsized impact on supply. History provides a clear example of how sensitive platinum can be to such pressures. During the global financial crisis of 2008, platinum surged to levels that exceeded previous records. That rally was driven by fears of supply shortages, strong industrial demand, and a broader move by investors toward tangible assets. Notably, platinum reacted faster than gold and silver during that period, reaching its peak earlier. Today, while the global economy is not experiencing the same type of financial collapse, it is facing persistent inflationary pressure. Concerns over currency stability, rising debt, and the possible return of accommodative monetary policies have once again pushed investors toward physical assets. These same forces that influence gold and silver are now being reflected in platinum's price, but often with greater intensity due to the metal's smaller market size. Recent data shows platinum posting exceptionally strong gains over the course of the year, marking one of its most notable performances in decades. A significant portion of this demand has come from regions where investors are increasingly favoring metals with both industrial importance and tangible value. Platinum and silver have often moved in tandem, showing similar patterns during recent rallies. Breaking through major psychological price levels has added momentum. Supply constraints, geopolitical uncertainty, and increased interest in physical assets have all contributed to the move. Expectations of looser monetary conditions, including lower interest rates, have also supported demand. Lower borrowing costs tend to increase liquidity and encourage investment in assets tied to both industry and long-term storage value. Platinum's role in automotive manufacturing, emissions control systems, and emerging green technologies makes it particularly sensitive to shifts in industrial policy and environmental regulations. As industries adapt and expand, demand for platinum remains structurally strong, adding another layer of support to the market. Because platinum is difficult to mine and refine, increases in demand cannot be met quickly by higher production. This contrasts with some other metals where output can be scaled more easily. The result is a market where sudden demand can cause rapid price adjustments. Another indicator closely watched by analysts is the ratio between gold and platinum prices. Not long ago, gold traded at roughly 3 times the price of platinum. That gap has narrowed significantly. Similar compression has been observed in other metal ratios before major market shifts. While ratios alone do not predict outcomes, they often highlight changing market dynamics. Comparisons have also been made to other rare metals that experienced